Hi guys, this is Mandy Chopra here from Titans. We're here at the VIP and sponsors coffee morning, and I'm here with none other than Bob Singh, Mortgage Maharaja from Chess Mortgages. Hi Bob.
Good morning, how are you?
Good, thank you. Really lucky to grab you here actually for a quiet moment. So really there's a lot of noise in the market about mortgage rates going up. There was a time where a few weeks ago they were thinking it might stop at 4.25. What's your kind of current prediction, if I may put you in the spot?
Yeah, we think, we did think rates would stay level because inflation was expected to fall below 10%. It didn't, unfortunately. So we are expecting a 0.25% rise now in the May Bank of England meeting because the bank wants to accelerate that downward trend in inflation.
Right, so protect, and then you think there's going to be any more onwards ones, or we don't know yet?
It's difficult to say, but I think there's a lot of tensions, obviously, geopolitically, China, Taiwan, Ukraine, Russia. So if those things don't come into play, yeah, we could see another rise.
And how is that now translating to the lender's perspective? So maybe we kick off at residential mortgages. What's happening right now? I believe a lot of deals are falling through and all that. So do you know anything about that?
I think deals, yeah. The rate of deals falling through is decreasing. Yes, yeah, they have fallen through and deals do fall through. But I think that's getting better. I think market confidence is returning. First-time buyers are just itching to get on the market, providing the products are right. And we heard last week that there's a 100% product coming soon.
Oh, brilliant! To replace the Help to Buy, which is now
yeah, which obviously is no longer. So they need to help the builders sell those properties. And luckily, the builders are also reporting good profits and good turnover in the first 3-4 months. Persimmon, Berkeley, they've all said they're making good progress, and that's good news.
Oh, fantastic. So you reckon the rates are going to stabilise somewhat for the residential mortgages?
Yeah, I mean, long-term rates are very good still. For 25% deposit, it's still below 4%, which is fantastic, compared to post-budget, which was 6-7%.
Yes.
So, people are saying, okay, it's still not a bad rate, let's go for it.
5-year fixed, 4%?
Yeah, 3.8.
Oh, okay. So residential is great. So we're helping them come back onto the market and start the market moving.
Yes.
Buy-to-let. What's happening in the buy-to-let sector?
Buy-to-let market is still difficult because the yields in the south aren't as good as Midlands or North. So we're finding that people are buying in the Midlands and North now because of better yields. But the rates are still, 4.8, 5, 5.5. And the fees don't help. They're sometimes quite huge, 2 and 3% in some cases. That sector, I think, has suffered. But yesterday, lenders come out with 80% LTV. So that just shows market confidence. When lenders are talking about 100% products, they're bringing out LTVs and buy-to-let at 80%. They're obviously seeing progression in the marketplace.
Obviously, lenders, just in the news today, I heard NatWest made an unprecedented profit. So they're not actually, they've increased the mortgage rates as per the base rates and obviously higher with all the extra fees and tens of thousands of pounds, but they're not giving it to the savers as much.
No, there's always a lag. And
it's lagged a lot, isn't it?
NatWest and Barclays, they've all made huge profits on the back of increasing rates.
But again, and for that reason as well, they have to lend. So if they don't come up with the right products, no one's going to buy.
This is it. So they have to innovate to stay ahead of the pack. So it's good to see lenders are innovating for a change. A lender came out with a 5-year fixed rate with no penalties in years 4 and 5 on buy-to-let. So they're not locking you in for that. They're saying, okay, we'll take a 5-year product, get the security. If rates drop, you can leave us in year 4.
Oh, so they are being a little bit flexible.
Flexible, yes. We're innovating to forecast the market trends.
Right. So how are you finding in your business? Have things changed? Are you busy? Are you doing more? What's the refinancing? Because I know there's a lot of refinancing.
Yeah, there's a lot of portfolio refinancing. A lot of landlords that were lowly geared are now seeing this as an opportunity to buy. So they're releasing equity from there. We've got some great second charge equity release products for business people who are wanting to maybe not disturb their base loan. We want to borrow from the equity, so we've got flexible overdraft facilities called a Hunter facility, and you can get that and buy cash at auction, pay it back, and it's a quite flexible way of actually releasing money from the portfolio.
So that's second charge on a property, basically?
Yeah, it can be residential or commercial, as long as it's for business use, and the cost is like 0.9% a month, so it's bridging rates, but it's flexible. You can take the money, pay it back, take the money. do your deals, and it can be renewed after 2 years as well.
And that's for businesses, a second charter in businesses
And residential.
and residential.
Yeah, you can release equity from your main house for business purposes.
At 0.99 roughly.
0.9,
0.9%. Okay.
which is very good.
Brilliant. Well, listen, I think it's been great having you here. Is there anything else that you might want to share that I might not have asked?
No, just keep us following the Titans. We're here every month.
And Chess Mortgages, how do they get in touch with you?
Yeah, chessmortgages.co.uk. We're on the on the web.
Sponsors website, but also their own website.
Yeah.
You get in touch with Bob. He is, after all, the mortgage maharajah, and he's got over 40 years of experience.
43.
43 to be precise, guys. Thank you for your time, Bob, as always.
Thank you, Benny. Nice to be here.